Good morning, good evening, good afternoon. Welcome to the stream, everyone. My name is Miriam, and I am live today with Abdallah Saeed from
Hello.
FlyElevated.
Mhm.
Hey, hey, we met
Thanks
on
for having me on board.
Pioneer. What?
I said thanks for having me on board.
Thank you, man. I feel like this is like really kind of synchronous or whatever you want to call that when things happen when they're supposed to.
Yeah.
Because I met you, just so everyone knows, I met Abdallah on Pioneer app. Let's definitely give them a shout out. It's a amazing place that you can be holding yourself accountable for building. If you're out there just trying to create stuff, check them out. And basically what happens in the Pioneer app is you submit feedback and to different builders, and then you every week meet
You
new people and stuff, right? So anyways, I saw Abdullah's platform, FlyElevated, and I commented on it because it was like part of my feedback, and I was like, this is so cool, like I definitely would use this, it sounds great. I'm really into financial literacy, and Abdallah is going to talk about what FlyElevated is, but it's basically transforming financial education for people like myself who are just not really experts on the stock market but want to do better. So then I don't know what you commented back or what happened. You like hit me up on LinkedIn, like.
Yes, I saw your comment and I just said, hey, let's connect. So I hit you up on LinkedIn and that was it.
Yeah.
Um, yeah, pretty much. So yeah, well, Fly Elevated, what we're basically trying to do, first of all, I must say I'm not a financial advisor. I'm just an educator. So what we're trying to do is to make the stock market more accessible to people because 90% of new stock traders fail, like they lose their money and then quit, which is a huge problem. So we're first trying to address that problem by being available, having experts on board. So at any time you could schedule an appointment or schedule your session and we can review your trades, we can go through everything, give you lessons, teach you concepts and move on from there. So we're readily available for you.
I think it's really a great problem to solve, and highly needed, especially given this last year that we've had with all of the chatter in the financial world and
Like Wall
like.
Street bets on Reddit.
Exactly, with Reddit just blowing things up. And first I joined like a Discord channel about stuff, and like it's all about, we've got crypto, and it's just things are changing. So I'm excited to be taken on through your program and get this mentoring education,
You know,
not
it's funny you
financial
said,
advice.
yeah, it's funny you said things are changing because that's what people say throughout history. The markets are changing, things will be different this time. Funny thing is, the human behavior does not change. So the stock market literally has little change through the internet invention, everything. Like I would be willing to say, like even with crypto, not much would change with the track history of the stock market. So uh, let's get started. Why don't I just like give you the introduction session? After that, you could ask as many questions as you like, and we could move on from there. Cool.
Okay, sounds good. Should I pull it up now?
Yes, yes.
All right, cool.
Just tell me when it's up.
We are up and going.
All right. Welcome to Fly Elevated, your ride to financial freedom. All right, let's get begin. All right, so in this presentation, we're gonna go over why you should start investing yesterday, our methodology, and how to get you started. And first and foremost, I'm sure you already know, but what do you know about inflation? Tell me.
Well, basically, as more people become part of our economy,
Hmm.
that changes how much things cost because of, demand and availability, and so money becomes worth
Less.
less. Yeah.
Not
I'm saying it, and as I'm saying it,
more.
I'm like, dang, this is not cool. Like, why?
Exactly.
Why is money becoming worth less? So then jobs have to pay people more to survive or get a living wage. And I don't think that inflation is on track here with what people need to live a full, fulfilled life, feel like they're safe. Yeah. What a great question. Is that right? What inflation is? Is that correct?
For the most part, yeah. It's exactly right, actually. I'll just add in, to simplify it, I just say that it's a money eating monster. So over time, as you said, your money is worth less. Have you ever played with an inflation calculator?
No.
Okay, I'm going to pull one up in Google really quickly. And give me 1 second. Can you see it? Let me share that. Share screen. Okay. Can you see it?
Yeah.
Okay, cool. So let's do a 43-year time span, because most people retire around that age at 63. So let's pretend you were investing, or no, not investing, you were saving up money from your 20s, about 221,000, because that's how much most people would have at the end of their working career. 667, about this much, right? So from 1997 to 2021, that's about 43 years. Am I doing that right? No, 1977.
You are asking the wrong person to do that.
And I'm the wrong person to do this math too.
Grabbing my calculator, what?
All right. So 1977,
Mm-hmm.
78. Let me do this math really quickly. 20. Yeah, that's about right. Sorry about that. I probably should have prepared more for this.
No worries. I mean, I think done is better than perfect, right? If anything that we're learning in Pioneer app, it's all about just growing and learning. And I think you're very brave to come on live internet broadcast stream with me and do this mentoring education session live without ever having done it before and literally never seeing me prior to this.
Yeah. Thank you. So yeah, if in 1978 you had the brilliant idea of saving up from age of 20 to 63 for retirement, so by 2021 you had $221,651, which is what the average American would have in their bank account for retirement. To be honest, you'd actually need 900,000 to get the same value of that 221,000. So just to put this in a way that it's easier to see, your 221,000 is actually worth 54,000, which is pretty. You can't live long with that. That's pretty sad. How do you think we can beat that?
Well, I'm sure you're going to say the stock market.
Well, investing and compound interest, to be precise. So with the compound interest, it's that's how the stock market works. It means you're making money on your money that you've already made. So let's start with the initial investment of zero, right? And every month you contribute about $429, which is what 221,000 would be in 43 years. Length of time, 43 years. and estimate return, 10% return. Now I'm choosing 10% for a particular reason. Yes, it's very low as in how much you can actually do in the stock market if you actually learn how to do it. But over the years, this is what your investments will look like. You would have saved 221,000, but with investing with compound interest, you would actually have at that point 3,050,000, which is quite a big of a difference from
Yeah.
being worth 54,000 to that much. So I think that proves how investing is pretty needed. Now, with just a little bit of improvement to your performance, we can go from that 3 million to somewhere around 65 million, which is a lot. Yeah, keep in mind that the more money you have, the harder it is to manage. So, yet this being realistic is could be pretty tough when your money gets up there, but it's doable. Are you following?
Mm-hmm.
Do you have any questions so far?
Yeah, but it's not related to investing. I'm just wondering if any cryptocurrencies that are currently set up are set up to be like, okay, for every like crypto coin that you invest, we're going to give you a 10% return on it. Like, are setting up these new financial systems
Yeah,
that are so disruptive
yeah.
in a new way.
I'd be very cautious with anyone or anything that would say, hey, do this and you will guarantee this results, because from my experience in the stock market, nothing is guaranteed. Like if it was, it would be really easy and 90% would succeed, huh? Right. Um, all right. So there's a phenomenon called the law of 72. And the law of 72 basically tells you how long it'll take you to double your money. So if you take the number 72 and divide it by your percent return a year, and remember we use 10, it's to give you how many years it'll take for you to double your money. So 72 divided by 5% return a year will be 14 years. 72 divided by 10 will be 7.2, and so on, 3.6. It cuts in half just by doubling how much your return is. And doubling doesn't mean you double, like, let's say you started with 1K, you double 1K and double 1K. No, you double how much you start with at the beginning of a year. So 1K to 2 to 4 to 8 to 16, 32, 64, 128, and then we get ridiculous.
What? Okay. What is this law of 72? Whose law is this? What law are we talking about?
I don't know who invented it. I don't know where it came from. All I know is that it tells you how much, how long it'll take for you to double your money. That's all I know. Depending on how much return you get a year, on average.
Okay. Is this important, this concept, for me to understand?
Yes, it is. Because we're going to talk about the 10% a year thing. I'm stuck on that because I wanted to make a point that it's very easy to accomplish this with little to no work at all. But with a little bit work, you could be getting 50, 60, 70, even higher than that percent a year. But
So
this,
the law of 72 is what exactly?
it pretty much tells you how long it'll take you to double your money, depending on how much return you get on average. So you can make a calculation, make a target, make a calculation, and be able to predict based on how well you do each year. You'll be able to predict how long it'll take to reach a certain goal.
So, okay. I mean, I really, honestly, I don't understand.
All right. Let's use an example, right? You're in the stock market, and let's say you start with $1,000. We'll just use this number right here, $1,000, right?
Yeah.
And you say, I'm not going to add any more money, but I want to get to 1 million. I want to know how long that'll take. Well, how do you usually perform in the market? Do you get a 5% return a year? Meaning, do you earn 5% of $1,000 every year, or how much you start with. Do you get 10%, 20%? And
Okay.
depending on that, you can calculate, okay, if I get 10% a year and I start with $1,000, it would take me 7.2 years to reach 2,000. Then it'll take another 7.2
What?
to reach
That's
4,000.
ridiculous.
It's a long time, right?
That's a long time. Like, that's not cool.
Yeah,
What?
that's why we don't want to do 10%. We'll do better than that, but
We
it's
definitely need to do better than that.
yeah,
You can't be out here 7.2 years just.
to double your money.
Ugh.
That's hey, think about it this way. Your regular 401k would usually return somewhere around 3 to 6%, something like that. So yeah. All right.
Okay.
So depending on how safe you want to be or risky you want to be, this is like a rough idea of the different vehicles in investing there are. So there's the savings category, bank accounts, which are usually the least riskier, giving you about 2% return a year. Then we have
Okay.
the government
Perfect.
bonds. We go into different funds like investment funds. Then we go into individual securities, and this is our domain. A little bit more risky. And again, as Warren Buffett said, risk is associated with how much you know. So moving to stocks, options, futures, commodities, minus the options, futures, and commodities, because we only focus on stocks.
Okay. So,
Hmm.
in this sessions with FlyElevated, am I going to learn about all of these or just the individual securities?
No, we only focus on stocks and ETFs. We don't
Okay.
learn about all these other stuff.
Okay. So
Yeah,
it's my responsibility to learn about the bank accounts, the bonds, the mutual funds, the investment funds, the securities, but you're going to help me get educated on stock options, stocks, options,
no,
futures,
just stocks. We
just
don't focus
stocks.
on anything else. Yeah.
All right.
So yeah,
Cool.
everything else will be a distraction. I really don't focus on them.
Okay. Stocks.
Mhm.
Let's do it.
All right. Now we get into the money aspect. Easy money. All right. So I know you've heard of something called the S&P 500 and the Nasdaq. You hear it in the news all the time. Would I be right on that?
Correct. I have a very good understanding of those. I like that.
Cool, cool, cool. Well, all right. So a lot of people don't know what an ETF is, though. Would you say you fall in that category?
Yeah, sure. Yeah, I don't know what an ETF is.
Okay. So an ETF, so there are, sorry, an S&P 500 and Nasdaq are something called index funds. And what they do is to track portions of the financial markets. So those can tell you how like Eastern Europe this sector is doing, like the tech stocks at this sector. It just so happens that S&P 500 was created to track the overall health of the stock market in America. The Nasdaq tracks the technology stocks.
Yeah.
They
Okay.
did create. You can't go to like the computer and try to buy the S&P 500 or the Nasdaq. Um, but what you can do is to buy something that tracks that, which is called an ETF, exchange traded fund. You could just go on the computer, say, "Hey, I want to buy the SPY, which tracks the S&P 500." So they're closely related, but they're not exactly the same. Does that make sense so far?
It does not.
Oh
And I
no,
have other questions around index funds.
go ahead. How
How
can
how do
mm,
I start an index fund?
you'd have to probably become a financial advisor, and it's a complicated road. Starting an index fund is not something I would even know how to do yet.
Do we
Um,
have any index funds for minority owned businesses, black owned businesses? Do we have any index funds? I want a more diversity of index funds. I want index funds that have LGBTQ. I want index fund for having diversity on their board. I want to index fund for sustainability brands. Where's the index fund of, where's the index listing of all the index funds?
I think that's a quick Google search away. Um, I haven't looked for those kind of index funds in particular, but um, if you Google it, you probably would be able to find something of relation.
Let's Google it up.
Yeah. So
what terms would you use to Google that and try to get that information?
exactly what you said. Index funds that track blank.
Okay.
That's what they do.
Let's do it right now because this
Sure.
is important. Index funds that track, let's see here, Black owned businesses. Nothing. These are all just other things, like you can fund racial justice, you can invest in a racial justice ETF.
I think that's pretty related.
It's related, but it's not an index fund.
Yeah, an ETF, they're close. They all track something, you know.
You can now invest in a racial justice ETF backed by the NAACP. Okay, nonprofit issuer launching second exchange traded fund that backs companies empowering women. Socially conscious investors, da 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 da.
Yeah, long story short, you would not be able to go on the computer and buy a mutual fund or an index fund, but you can go on the computer and just buy an ETF whenever you want.
Okay, this looks pretty freaking good. I'm into this. Okay, we're going to share this. Do you like this website, marketwatch.com?
Yeah, marketwatch.com. I recognize that. It's pretty good. Yeah.
They're legit.
Mm-hmm.
Ooh, this is a long URL. We're going to have to drop this into the comments for people. Okay, thank you for indulging my side note.
No worries, no worries. All right. So the NASDAQ tracks now there are several ETFs that track these two indexes, but I've focused on the SPY and QQQ because they're well known. So the average return of the SPY index fund is about 13% a year, which means you could just buy it and not do anything for year after year after year. On average, you earn 13%, which is greater than that 10% we did the calculations for, which is why I chose the 10% number. So let's say you invested $100 from 1970 to 2016. Now, this gray line right here represents how much it would be worth in 2016, or how much it would be grow. Sorry, I'm mixing up my words. How much it will grow in 2000 by 2016. So roughly around $3,000. But what happens when you just miss the 25, not all of them, just 25 of the worst days in stock market history? That $100 will be worth somewhere close to 12,000, which is a huge difference. And that's pretty much how we teach you how to trade. So you change your average return somewhere around 10% or whatever to somewhere ridiculous. And pretty much. Do you have any questions about that? Hey, you said MarketWatch.com. No, I got this chart from MarketWatch.
Okay, cool. I just want to make sure, like, you're not teaching me how to trade. You're just educating me on how trading happens and things. Like
No. I'm teaching you how to trade. You gotta first know how trading happens,
but it's not an advisor.
No, I'm not an advisor. I just these are prerequisite things to learn. Yeah.
Okay.
Yeah. All right. So Every day we do on the trading day we do email you a daily rating of the market along with a small current commentary so you know which way the market is trending. So during uptrends, most stocks are rising in price, thus you invest. And during downtrends, most stocks are falling. And contrary to when people say buy low, sell high, we don't buy during downtrends when most stocks are going down in price. That is how we will end up achieving this kind of performance away from everybody else who
We don't buy when it's going down.
no, we don't teach you that at all. That's actually how most people lose money and then get discouraged and lose heart and just quit after
We buy when
losing
it's going up because it's going to go up.
pretty much.
That makes
If you
sense.
if you want a super performance, that's what you want to do. So again, we buy during market uptrends. We buy rocket stocks. Now, rocket stocks are not your Google, your Apple, your Amazon. They're your pre-Google, pre-Apple, pre-Amazon, before they became as big as they are now. That's when they were moving the fastest, and that's when we want to catch them. So we do look at the fundamentals of stocks, make sure we they are fundamentally strong, and we also look at technicals, which means we look at the charts and make sure the technicals are strong before we buy. And during downturns, as I said, we do not buy stocks. We let our stop loss do the work. Meaning, when most people think about a stock trader, what they think about is a guy or woman sitting in front of a screen with multiple screens and just, staring at it and buying, selling, buying. No, that's called day trading. And most of the 90% statistics come from doing that. You don't want to do that. We teach you not to do that, actually. What we teach is to, on the night after you come home from work, you look at your computer, market is closed, see how you did, make your decisions, set a stop loss to either buy or sell or do nothing, and go to sleep. Next day, go to work, come home, repeat. Doesn't take more than 10, 15 minutes a day. And from that, you change your finances from 0 to 3,000. Like, very easy to do. Doesn't take your time. And phenomenal results.
Okay.
That's how we teach you how to trade. So,
Okay.
yeah.
All right, let's do it.
So next steps is at the after this, I'm going to email you as an email called next steps. You're gonna be assigned homework because it's only once a month, so you have to keep up with some kind of knowledge gaining, and
Right,
we move on
right.
from there. Any questions?
No, I am gonna do my best.
Awesome. Awesome. Stop sharing real quickly. All right, awesome. That's all we have for today then.
Okay.
Yeah.
Thank you for this. I appreciate it. I'll look for the email and do my homework.
Awesome. Awesome.
And
All
we'll
right.
see you on the
Thanks for
first of the
having me.
month. So I'm not making any investments between now and the next session.
If you'd like to experiment based on what you're reading, sure. I'm not going to stop you, but I would advise start very slow. I'm not an advisor, but I'll start very low with disposable money that you're willing to lose. Somewhere.
I'm sure I'm going to have a lot of questions on what I read.
Email me.
Okay, great. I can email you if I have questions. Okay, perfect. Thank you so much. I encourage everyone to check out FlyElevated, fly-elevated.com. And thank you to the people at Pioneer for helping me connect with Abdallah. We will be broadcasting my mentoring education center sessions with FlyElevated every first Monday of the month. So you can tune in and join us and follow along. You can also reach out to Abdallah on the fly-elevated.com website to get set up with your own education sessions, which you do not have to broadcast live.
All right. Thank you so much for having me. Appreciate it.
Thank you. We'll talk to you soon.
All right. Bye-bye.
Bye.